Thomas, this is your environment, man. It's custom made for you, buddy. Welcome back.
Thank you. Yeah. So it seems, we continue. I missed the kind of, I've been here in order for about 20, maybe 7 minutes. But yeah, it seems that
Do you have anything to share before we start talking?
I could show you some of the daily shot about the Fed minutes. It's interesting, actually. So this is just something they give you to. Can you see this?
Yes, got it.
So yeah, this daily shot and excellent. I recommend everyone to subscribe to this. Is good stuff. But there is about did you talk about the Fed minutes? Anything?
Yes.
Yeah.
Yes,
okay. Okay. So now you know what's in here. So basically, that they are really now considering to not just taper, but the quantitative tightening is there. So and this is something like we and I have been warning for a while. So you know that I said that they would start it in September. Well, they didn't. They started in just a month later. But the fact is that there's someone that writes just in Twitter 2 hours ago that they have really not noticed any tapering if you look at the Fed balance sheet. And I hadn't had the time to check it today, but it doesn't really seem that they have done the tapering a lot.
You mean so it's all jawboning and they're not lessening their buying?
Yeah, but they are truly worried. You see it in the minutes, but they are also, I think, mortally afraid of starting the tapering and the quantitative tightening. So, but if you look at the bond yields, they are buying it for sure.
Yeah, they remember bond vigilantes from the 80s and 70s.
Yeah.
They're old men now, but they're still vigilantes.
Yeah, they are still there.
Yeah.
If these trends continue, it's not going to be a long time before the U.S. economy is seriously in trouble and the financial market's true. And this is interesting. The probability of 4 Fed rate hikes in 2020, it has increased massively. I've been saying that the Fed will raise rates 6 times this year.
Oh my God, 6!
Yeah.
Do you remember a saying, Thomas? You and I, we go back a little while, but wasn't it 2 hikes and a stumble? Isn't that what it used to be?
Yeah, that's what it used to be.
Okay, God, I can imagine you're not going to be stumbling with 4 or 6. You're going to be on the floor.
Yeah, you're going to fall massively. And what is interesting here?
So why are they doing this now?
Inflation.
Why now?
It's so widespread. They really cannot. Like I talked with one farmer in Finland 2 days ago, and he had ordered the fertilizers.
China's not sending it.
Yeah, and they have cost 135% more than a year ago. 35% more.
Yeah.
And this is spreading all over. It's I heard it in the US too. So if you just consider that the fertilizers are, and they come to the prices with a lag. So let's say that we have, I think by the end of the year, by summer, we have massive increases in the price of food. They will guarantee that the inflation will keep going. And that's just few
because higher rates do not affect agricultural commodities.
No,
I mean, just because it can affect stocks, maybe economically sensitive commodities.
Yeah.
I want to ask you, what's your take? The unusual thing that stands out to me today is when we were getting risk off yesterday, buddy, crude barely budged, and it finally, closed a shade lower. And here we are today, up to almost $2. So it had no effect where black gold acted good, yellow gold giving it up. What's your comment on crude? Do you think that it could have something to do with Putin? And
it's a geopolitical issue here.
Okay.
In Europe, definitely. So I don't know, and I don't know what the Arab states are playing. But did you know that it was just before Christmas Putin closed the natural gas pipelines that come through Ukraine, closed them for a while. So it's a geopolitical game here. And
it's got a lot of leverage.
Leverage, yeah, sure. And the price of crude can go anywhere. It depends what kind of moves they they make in Ukraine, for example.
So we've moved from, we're so used to having oversupplies of cheap goods for generations now, at least a generation. That's what made Walmart and Costco, to a new paradigm of the just-in-time inventory to now out-of-time inventory.
Yeah.
I don't. Do you think that's going to change?
Yeah, it is. It's definitely going to change.
I mean, we're not going to go back to 2019 in an adversarial relationship with China. We can't, can we?
No, you cannot. No. It doesn't happen. So I think we have a massive change coming with the, all the global supply chains. They need to come back. The in-time stuff needs to be more like, you have warehouses and you build more of your stuff by yourself, and that's the where we're heading. That's the where we're heading.
So what do you do? I mean, there really was nowhere to hide except cash. And I guess it depends on what fiat you prefer. But yesterday, bonds are leading this and rates are leading this, but gold tried to hold. But it's given it up today. You still think you just have to keep accumulating precious metals here?
Yeah. Precious metals, and then one thing is that if you're thinking, if you want to hold European assets or cash, you really need to start to consider in what country you hold them. Like, let's say the Europe, if the ECB will be forced to raise rates at some point, and at that point it's highly likely that Eurozone unravels. So in that case, all your assets will be priced based on the country where they are. So if you have cash in German banks, it will be, German euros after that and stuff like that. So you have to be careful where you hold your assets in Europe, at least in short term.
Where are you holding yours?
Finland, basically.
Okay.
Now,
is it because you live there or because of the structure?
I live here. That's the only reason.
If you had your druthers, where would you go? Switzerland?
Switzerland and US, Texas.
Okay, Texas. So is Texas going to secede? That's an interesting answer.
No, I think what I'm hearing and what I'm seeing from here is that I think that Texas they may even leave at the worst case.
Yeah.
But in any case, it's the powerhouse of the US now.
That's really interesting. So shifting from the coast, and Elon Musk, do you think it has a lot to do with what Elon, also their tax policy of zero state tax, energy centric? Is that what makes it a powerhouse?
Yeah, powerhouse, and the fact that they don't really, they really try to, I think they try to uphold the American dream. In any case, and defend they are pushing back against the White House and the really strange policies they are not driving. It's a divisive policy. Like, everybody blamed during President Trump's era that he is trying to divide the US, but that was nothing compared to this.
Yeah.
So I think you have to.
I mean, we normally don't talk politics, but the divide is as big as the Grand Canyon.
It is.
I mean, one statistic, and it's not political, that I saw is that the past 5 or 4 or 5 presidential elections, they poll the losing parties' voters about whether or not they thought there was a problem with the election. And you could have said that with Gore Bush, right? I mean, that was a Chad, right? Yeah. And most of that, the numbers came in at about 10, 11% throughout all of those elections. And now it's at 60, which is, a huge differential by the magnitude's unbelievable. So,
it is.
So, and Bitcoin's not a hedge against risk, isn't
Yeah,
it?
no, this is the one thing that everybody's been thinking about. Well, many consider that Bitcoin is the the one asset. It's the new gold. But if you look at
Yeah.
this, it's well not. So it's
Yeah.
a speculative asset, and I think this shows it rather nicely what's
So
happening.
maybe we need maybe this is by design for us to go cashless to blockchain for all currency interaction. You think that's a possibility? I mean, what's the what's the end game here, Thomas?
I think the end game is we go back to cash for a while, or even precious metals.
You think
Because it's
that's
just
what the governments are going to do or going to want to
no,
do?
no, the governments are trying to do it the other way around. They are trying to
Okay.
bring the central bank digital currencies.
Okay. So how are citizens of each country going to fight that? By having a black market and everything?
They're going to fight it through the privately issued cryptocurrencies naturally. So you have these bitcoins, and they are kind of a remedy against the power grab of the central banks and the global elite, if you may.
Are you buying any of those?
No, not at the moment, no, because we consider they will crash when the crash. All the cryptos will crash when the crash comes. So we are not buying any of those.
Do you think it's begun, or this will just be a normal 10% or even a 30% correction, but then the market recovers as the Fed reverses course?
Well,
do you think the Fed will really be?
Everybody think that the Fed will revert course after the market crashes, but I don't think they have options because the inflation is so widespread now. So how this is like different as
but
before.
They can't cure the supply problems with higher rates.
No. But in the 1970s, you had the problem, similar problem, the oil shock. But the thing is, when it transfers to wages, as it now is happening, then it becomes kind of a demand side issue, and they fought it by raising rates back at the time.
Right, I remember. Boy, everyone's wearing win buttons. Whip inflation now. And it took it took 20% rates back then.
Yeah, too. We have I start a new share. This actually, we don't usually do politics either, but we have a special report on the Great Reset and what it would mean. We just needed to take a stand, an analytical stand of what it would mean if the Great Reset is a term pushed or the agenda pushed through by the World Economic Forum, and it's really strange. But here is a there is a lot of stuff here.
So you have a special report that you put out. When was this?
This came out on the 29th. So just 2 days ago, actually, a week ago.
Okay. All right. Interesting.
And we kind of mapped out where we are heading now. What is the route we are on? Then we had we explained what the Great Reset actually is, and there are like three main components. First one is the government should steer the market towards fairer outcomes using taxation, regulatory, and fiscal policies and stuff. Then there's the ensure that investments advance shared goals. And then there's to harness the innovation of the so-called fourth industrial revolution to address health and social challenges. These are really nice goals, but everyone understands that if you do analysis on this, government steering, well, that's not good. That's never led to anything good. Government should ensure that investments share some shared goals. That's like in the Soviet Union, it doesn't work. And it's really when you do the analysis on the Great Reset, it starts to look really bad for the world. So there's all this kind of government control pushed upon us, and that's worrying.
Yeah, it is.
But there's the thing that we have three scenarios here, where the great economic takeover, global authoritarianism, and those. But what I would like to talk was this inflation and the Fed funds rate. And the 1970s shock, the oil shock, and how the Fed funds reacted. You can see it on the red line here.
Yeah.
So as the inflation started to rise, so did the Fed funds rate, and then they had to rise it really high. And the thing is that if you consider now that the wages, like the quits in the US are really high now, so people are quitting, I think mostly because they know that they will find a better job with better salaries. So the kind of workers have the negotiation power back.
Yes, they have.
I think, yeah. And this is what happened. Like in 1973, the wages were not rising really fast. It was about 6% annually, but 6 months later, it was close to 10%. So it takes a long time before wages react to the supply side shock. But when the wage start to go, then they just, they keep on rising, and they keep on feeding to inflation. And then if you have any other shocks, like in the late 1970s, you had the Iranian Revolution, and then you had the war between Iran and Iraq, and it put a new shock to the wages, and then the inflation really took off. And just think now, if we have another shock, something like for example, from the prices of food, something like that, to the increasing prices of fertilizer, whatever.
Food security.
Yeah. And now the Fed funds rate is at zero or 0.25, whatever. But and they are so far behind the curve. So they really have to, because the inflation is stopping at some point, because it's the mandate of the Fed to keep the unemployment and unemployment, and also the prices. They have just these two, and if they let inflation run amok like it's almost is now, then there's going to be political repercussions, and people will get angry on the inflation from the inflation.
Yeah, I believe that's already
what
happening.
They have, yeah, definitely. So they have to be very vigilant and raise the rates really fast. And the rising of the rates, it's difficult. But I would like to just remind you what happened with the. Let me see, I have it somewhere there. Okay, so what happened with the quantitative tightening, which means the runoff of the balance sheet of the Fed. So we have the Dow Jones index. Since the President Trump got elected, this was one of our blogs, and you notice that at the early 2018 they started to accelerate the balance sheet runoff. I think it was about 50 billion a month or something like that. Yeah. And then the market crashed in early February. It didn't really raise, and then the global quantitative tightening started. So the global balance sheet of the central bank started to shrink, and then we had this massive sell-off starting in October and in December, and that was when the Fed pivoted. Yeah, as we all know.
That's when Kramer was saying they don't get it.
Yeah, and everybody was blaming the Fed. But the inflation was really low then.
Yeah.
Now it's it could be early, before summer, we could have even the official figures could be in 2 digits. So can the Fed really make a pivot then? I'm rather skeptical. And this is the real risk, that they cannot turn back. When they start to raise rates and quantitative tightening, they cannot stop it. And that's the risk. And then we have a outright collapse of the financial markets and the economy. So they have they might face an impossible dilemma during the first half of this year.
Yeah, everything's compressed into this time frame.
Yeah.
That's been happening for the last 10, 13 years.
Yeah. And then one small thing, is the how the quantitative easing, quantitative tightening works, because the quantitative easing is basically the Fed using the reserves to buy stuff. the treasuries basically. And this works as long as you are buying from, banks. But if you are buying from hedge funds, you have to pay them. You cannot use reserves, and then you have to like create deposits to pay to buy the treasuries. And you can see a massive increase in cash in commercial banks because of this. And this feeds into the stock market and all that. And then when you have quantitative tightening, the amount of cash drops really heavily. So this is how it works. But we think this is the main mechanism through which the quantitative easing and quantitative tightening affect the financial markets, because it's a central bank credit. And if you take that away, start to diminish it, you will have serious problems.
Tightening credit conditions. Do you keep your cash in a bank in Finland? Are you worried about the banking system?
Yeah, we are. We have done an analysis on the Finnish banks, and the fact is that in any banking crisis in the world since, well, at least during the past 100 years, every country has kept one big bank standing, because you need to do that. Yeah. So in a banking crisis, you need to kind of make an analysis in any country you are, which bank will be kept open in any circumstances. And we have our money there, and then there's actually a friend of mine. They are buying, not building a bank that will operate based on gold. So it's called Voima Gold Bank, and they have a vault here in not actually just 2 blocks from where I live. And they are creating a gold-backed banking system, or banking branches, and we have also accounts there. So that's basically our preparation. But the thing is that look for the bank that will be kept standing no matter what. That's the safest bet now. But there also, the other thing is that after the 2008 crisis, they put in place regulations and laws that allows the banks to use the deposits to capitalize themselves.
You mean the deposits?
Yeah, deposits. Yeah.
So you're talking bail-ins.
Yeah, bail-ins. Yeah, and they did it in Cyprus already.
Right. And
that's a big risk. So we have what comes to where you hold your assets, you have massive risk. You have to consider, the situation in the financial markets, in the banks, and also if you have assets in Eurozone, you need to think what happens if the Eurozone unravels. So if you hold Italian assets, they can become half in value when the Eurozone unravels. So this is I think we are entering a time of unprecedented economic turmoil. It's few months away probably before it really starts. But this can be something we have never seen before. And that's something everybody needs to be prepared for.
Thank you, Tuomas. Happy New Year.
Thanks. You too.
Anyway, I'm going to have a disclaimer at the bottom of the interview. And it's going to be, stay away from razor blades. Put them away before you listen to this. Right? Yeah. Anyway, you never know if you have faith till you need it. So we'll see. And appreciate your looks as always. And when we have you back, and if we're still broadcasting,
we have broadcast.
Yeah. So all I can say is thank you, buddy.
Yeah,
I mean, you don't pull punches. You say what you think. You've been warning about this for a year, and I'm sure you've been taking heat. And I bet you hope you're wrong. And but you gotta say what you think.
Yep.
And we appreciate that, and that you came here to share your views with us today. Appreciate it.
Thanks, and talk to you again.
Yeah, we will.
Yep.
We'll keep the narrative going. And so that's a wrap, everyone. You could follow Tuomas at MT Malinen on Twitter. And how do we get your report?
You can order it online from our store, which you can find at gnseconomics.com.
Okay. All right. Is that a link on your Twitter handle?
Yeah, there's a link there.
Okay. All right. Thank you very much, buddy. Be
Thanks.
safe, be healthy, and hopefully we'll talk again.
Yeah, will do.
All right,
Bye-bye.
buddy. All right,
Bye-bye.
that's a wrap. I'm glad you guys enjoyed it, and good luck today. And you can join the team on the Morning Edge if you haven't tried the trial. I mean, what a great environment. I did see Amanda cash in on that washout in S&Ps yesterday. It's empty. Let me look. You'll see it when we post it, but I believe it's at MT Malinen. Pretty sure that's it. Oh, that was you.
Yeah, that's it. Yeah.
Okay. All right. See what a memory I have for an old man. All right. Take it easy, my trading warrior brother. And guys, we'll see you tomorrow. Big day with the NFP, bigger than usual with what's happening in the markets. And, you know, you need to collaborate with the community during a time like this and not just have your own point of view, but have a view of other point of views. So I'll talk to you guys tomorrow. Remember, don't just count your pips, count your blessings. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.